This was a really nice double top for the Bears. This double top led to a 60-point move, so it was pretty good. It was a FOMC speech today. It's October 19th, 2023. We're going to do a breakdown of the E-mini. Yesterday's price action was a broad bear channel. Bulls and bears made money, but it'd be better for newer traders to just sell the pop. Bulls are making money buying lows, and bears are making money selling the pop. You can see that the bears are shorting everything above the EMA or channel highs if you don't like to use the EMA, even right here. So being patient, understanding not shorting lows is the most important thing. That was yesterday's context, and today we had a bit of a range into a double top and we sold. We had FOMC, so the first part of the day was kind of boring. There's a lot of Fed speakers. I think it was Powell today. So the first 6 bars of the day of a sell. Bears want to see a continuation from yesterday. Every side always wants to see a continuation. Yesterday's patterns can help us out today. So maybe we see like a slight continuation for like an hour or two. I can't recall if that happened today. I think we stalled out around the low. But this is how we can create context for the opening when there's not too many bars. And look, the channel is still getting respected. Channel's getting respected today. This is the first 6 bars of the day. Bulls try and push up here. Bar 1 is a failed breakout by the Bulls, and this creates a higher high double top with yesterday's price action. This also gives the appearance of a bull flag for the Bulls, so they could start to be buying lows. Yesterday they bought lows and it worked out, so why wouldn't it work today? These bear candles are also very wicky. Let's go into the next hour. We sell off. This is interesting. I want to point this out to you guys. This is important to understand what is going on. So, failed breakout by the Bulls, right? Short the pop. But here, so this candle obviously gets put in before this candle. I'm talking about candle 8 here. Makes the low. And I think bears short this because this could be a low 1, pull back low 2, bear flag, top of the bear channel. It's a good sell. It ends up being a trap. And so with this being a trap, that means it's a failed breakout. And they have to cover themselves. They have to buy back their shorts, and bulls are buying lows. But then the bulls get trapped again. So now we have a reversal after a reversal. We have trap bears, and now we have trap bulls, and now we sell again. I'm not saying to get short, I'm not saying to get long, I'm just saying this is how traps get started. I think if we didn't have FOMC, this could have been a little bit better for one of the sides, but since we had a speaker today, that caused the markets to consolidate and people are waiting for more news. But even though, regardless of the market, the dude talking, FOMC, it's still a failed breakout, Weak trader trapped here. Weak trader trapped. They should be scalping. This is a limit order. So this is important to understand, like, reversals when... I mean, you could say this is a reversal, this is a reversal, this is a reversal. But who's getting trapped here? Look at these bars. You know, you could say bulls bought here. You could say bulls... there's always going to be someone placing a trade on every candle. But think about the trap here. This really does look like it's going lower. But there's a wick here, and there's candle 77 from yesterday. So bar 9 traps the bears, but then bears also see this as a double top, and they probably have orders laced because when they short here, strong traders, when they short lows, they're not going to get out here. They're going to short higher, and they're going to get out at 50%. So and we know the market moves. Strong traders move the market because we're retail traders. So you have to understand why, if you got out of your short here, why it went back down is because they're covering themselves to get out at 50%. In this case, they got out. They made money. Let me just change this up. I don't want to confuse. Oh, wrong one. I don't want to confuse too many people because this is taught in the Al Brooks course and he goes into detail with it. But this is also price action and it's something I'm learning, so I am going to talk about it to... Okay, so you guys can see that. I'm talking about this green fib. So bears short bar 8, so we put that as our entry. Maybe their entry's here. Or maybe they get filled on bar 7. We're just going to say there. And then they short the high of bar 9. This is where the bears can get out for a break-even trade if you're trading futures. I don't know how this works with options. This is the futures equation. I'm sure it works for options. I'm talking about futures because that's what I trade. So they make money because their goal is to get to the 50% mark to hit out. But bears believe that this is going to go lower, so they don't hit out. They just scale in higher. The premise is still good for a trend lower. That's when it makes sense to scale into a bad position is if your premise is intact. If the bulls just kept going up, they would be forced to buy back their shorts, and that's what would start an uptrend or sideways. But since they were confident there were going to be lower prices, they shorted higher, and that's what I think caused bar 10. And this happens across the entire market on all. So like we could say, okay, so like let's do the same exact exercise. Okay, so bar 8, bears get trapped. They short the high of bar 9, and they get out, or they make money. They get out. They do something where they don't lose money. What about the bulls that buy bar 9? They're gonna buy lower. They're gonna buy the low of bar 10. No, they would buy the low of bar 8. That's the range lows. So right here. So let me make sure you guys can see this. So they would buy the bar 8 low, or they would have more here at bar 78. I think they would have more at 77. I think 77 is where the real orders would be, because I don't know any bulls that put buy orders under bear bars. So I'm gonna say that the bar there, the excuse me, I'm getting tongue tied. So they buy the high of bar 9. They buy the high of bar 9. Now they're trapped. They're thinking, oh crap, I need to buy more. They see yesterday's low, and I'm sure the target for bears was yesterday's low. The first target is always the first, like, the market's always looking for support and resistance, and after bar 10, I think it should be in everyone's head that we're tagging the low. Whether this is your low or this is your low, it's up to you. I had my low set there, so let's say they have a limit order. Look, see, if they have a limit order here or here, they have what? Now their price gets out here. If you guys trade the E-mini and you see this bar came down and shot up. So it grabbed the orders, and then the bulls sold out of their positions because the bulls were wrong. The bears are right, so they're holding their break-even trade. The bulls are getting out, and that's what. And so now, back to trap traders. The bulls are now getting out while the bears are shorting, and this is going to create another leg. I hope you guys understood. I know this is really important to understand. I'm just now grasping the concept, and it is quite complicated to do it as the market is moving. But it's good to understand why the market is moving in certain directions. Why did bar 9 fail? It's because people were already looking at, they probably already had orders set here. This is a pretty nice sell doji. I wouldn't take that sell because of this, but I am sure there are some smart traders that understand how to trade this better than me. So let's go on with the breakdown. Bang. See? Okay, obviously this is a little fixed because I was in this trade. But do you guys see the dump? Like, because there's no more bulls in the market. They had to hit out, and bar 11 is proof. And on top of that, they broke through the bar 76 low if you guys look for the wick. So now we see if they get continuation. Let's say they buy the high of bar 9 and they don't have a limit order set there. They're going to put a limit order here, and then if the market gets back to this level, if bulls have strong conviction because we are at the low of a range, maybe we go higher. Or if bears or if bulls think we're in a bear trend, they may hit out. We are in a range, and last final flags in a range fail, and there's a lot of buying pressure you can see in these wicks, but there's also equally a lot of selling pressure. Right now, this is to me barbed wire. Either you're selling because of this move or just wait. You could buy. I mean, you could do whatever you want. It depends how you manage your trade. I sold and bought. I sold this candle, and then as these two candles started to form, I think I hit out and reversed. Because I remember seeing the double top. That was the candle. Now I remember. As soon as bar 22 happened, I was like, yeah, this isn't for me. Because bar 22 is a super nice pin bar on support. Or resistance. Yeah, it's on support. It's a failed breakout. And look at that pin bar. After two legs, double top. And I saw this bar, and this bar sold fast and then came up slow and then formed a pin bar. So it snagged orders, and then the way bars form is important, and I can't talk about it because the bars are forming differently as I play the trade. So if you guys are trading the E-mini and watching these breakdowns, think about how these bars are forming when I'm talking about them. Because this bar, it sold and then came up slow, so it's taking all the orders. This bar snagged, this bar grabbed the buy order set by these bulls, but they started defending it quickly. Because just like here, when you're trapped, you buy back more, and it goes up. And you don't do that for every trade. If you're new to trading, don't even think about adding to a losing position. I only do it on practice accounts. I'm not adding to a losing position on a live account because you're playing with fire if you're doing that. But it's a tool, and it's good to know if you're in a range how to get out of a bad trade. I've been talking a lot about the break-even stuff because that's how we find trap traders. And this is a FOMC, Just stay out the markets, wait about 30 minutes. But yeah, traps. I mean, we all want to take a trap. We've all been trapped. We've all been on the side of a trap where it helps us whether we know it or not. Okay, here we go. This is the morning's range. Just kind of oscillating, and we overshoot. FOMC overshot the low, so sell high, overshoot. ATR was like 10, so I used a 10-point stop on one trade and got pinged out one bar later, and I think it might have been, I'll have to look at my trades, but it was one of these bars I just entered, I got pinged out, and then it went in my favor. I think I'm actually looking at it right here. This was almost 10 points. Yeah. I went short here. No, what the hell did I do? 10. I think this was the candle, so I go short here with a 10-point stop. I don't know. I have to look at the trade. Something funny. I think maybe I FOMO'd into it because I got pinged out. Yeah, or I had a stop order. I'll look. Anyways, okay. This is a double top, and we are in a range, so a double top could be credible, but it's a range, so make sure you buy back your shorts and wait for the breakout. It's not breaking out until it's breaking out. But for the most part, we are ranging all day. FOMC, overshoot. Now we have a double top here. We do have somewhat of a head and shoulders, I think, or that might be, but there's no bull bar right here to confirm the bulls. So if you're buying blindly against this, you are strong, but I would not. This is not a bad trade. It's an inside bar at lows. I didn't take that. I took one trade here and got dumped on. So I was like, yeah, I'm not even playing with this. And I just came back around here, got stopped out. I took one or two more trades and made it back. I'm pretty much not going to trade FOMC anymore because of one of these stop outs. Once I find it, I know I was mad about this one, but this one was frustrating because it was like to the tick. So double top, we sell back into range lows. This is the new range lows now. So let's see. After range highs is tagged and we break out, the first PT is range lows, and if that gets met, we go for a breakout of the range. Bears are starting to sell more now. Bulls are buying a little bit. I think this is more profit taking. Get a nice bear flag. This is a really nice bear flag, and this is the bear flag where I made money back because it was like a leg one. Bulls get 2 legs. This is a low one. This is a low 2. This is like a textbook Al Brooks bear flag. Wicks showing strong selling. Pullback, smaller pullback. Look, the pullback got smaller. We have 3 bull bars and then 2 bull bars and then 1 bull bar. So bulls are getting weaker and weaker and weaker. And we sell. So once we see this, I'm looking for a leg 1, leg 2. We can be conservative at first. I mean, the ATR is 10, so today maybe not be the day to be conservative. Go here, and we do it from like right there. And even that's almost met. But also, our long PT can be the breakout, the range. What is it? -2. Excuse me. So here is the breakout measurement. Where did it go? Right there. That's a pretty big fall, but this looks like a juicy leg anyways. So as they break out the range, 80, is that right? 88 points? That seems pretty tight, so delete that. Maybe we go from here. I mean, 88, asking for an 88-point move is asking for a lot. Okay, we'll just roll with that for now. And we get continuation. Unlike this earlier breakout, bears are getting continuation. See? Doji's buying, wiki. Excuse me. My throat's clear now. No more coughing. Here we get continuation. Bear bar. We get 3 bear bars under the low of the day. So I think this would be a good candidate for a successful trend lower. Continuation. At candle 62, if I'm not short by now, I'm getting in because this is juicy as hell. Double top, bear flag, strong bar. Bull bars are getting weaker. So the leg 2 just got... Okay, the leg 2 was way more credible. See, leg 2? Oh. I'm going to delete the range here. And we're going to... So this didn't actually get met. Okay. I want to find where the leg's at now. I'm going to delete this. How about from this candle to that low? Okay, so that gets met a little bit better because, yes, we go lower, but look at this next candle. Look at 76. So that could be profit taking as soon as it gets met. I think it's pretty good to do measured moves backwards. So how you guys saw me see the thing here. Because that way, Al Brooks, when he teaches, he'll look before the range is even up. He'll say like, okay, if this is the breakout, this is 50%, this is the height of the range, and he just starts doing things in his head. He doesn't really talk it out loud, but I've seen him say things like that. So that was a day. It was pretty slow in the mornings. Bulls failed above the EMA again. Bulls failed above the EMA again. Just like yesterday, same vibes. Pop, sell the pop above the EMA. Sell the pop, sell the pop, sell the pop. Sell the pop, then you made money. All you gotta do is sell above the EMA and you're making money. Is that gonna happen tomorrow? I don't know because this move happened fast and it's big. And what happens at the end of a trend? The biggest bar and it happens the fastest. And on a different time frame, whatever time frame encompasses all these bars, that means it got filled up fast with like huge bars happening. So on a different time frame, what I'm trying to say is on a different time frame, this could be an exhaustion. We really don't know until tomorrow and next week. But what I do know is this sell was fast. It was fast. And on the 5-minute, when the market surges up, I classify that as an exhaustion. So on a bigger time frame, it should also be an exhaustion because price action is fractal. And that's why we have to start thinking about multi-time frame, like what's going on in the hourly chart, what's going on in the 15-minute chart. This is a 10-minute doji, 10-minute reversal. Let's see. See? 10-minute reversal. Okay, so I had the heights wrong. But that looks pretty good. Like, maybe on the 20-minute, this is a doji that looks like this. It could be like a T or something. Let's see. Bang. See? Oh my gosh. So it's really important to just kind of try and piece together. Start easy and just do the 10-minute. If you're looking at the 5-minute chart, start easy and just do like, okay, do it exactly like this. Like, okay, this bar, it went up and came down. So I think it's going to be a doji. I think it's going to go up and it's going to come down. It's going to look something like that with the body's going to be a little bit lower than the tail. Something like this. And then we just check if you're right. Okay, so I was wrong. I got the body backwards. This part should be up here. But it was still, see, so now you can start to see multiple things on one time frame. I'm trying to just look at this one more time. Or maybe it might have actually combined these two bars. I don't know. But you guys get the picture. I'm cutting into the 20 minutes, so I'm going to go over the daily chart and I'm going to wrap it up here. Continuation from yesterday, you know. Bears got their lower high double top on the last week's high. And now we're making new lows this week. We broke out of last week's low. So I think they're going to shoot for range lows, or if we are in a true range bound environment, maybe bulls buy higher and we pull back. We are a little bit stretched out from the EMA. Maybe we get a little retracement as the EMA comes down, the market goes up, and we meet at the 50% level, and the market decides what goes on again. Let's just do the hourly chart. These daily time frame analysis, I think they're getting a little bit quicker because it's only adding 1 bar a day. You know, I'm assuming most of you guys are coming back, which I really do appreciate. So we are able to like build and stack on what we're talking about. Here's that pullback on a 1 hour time frame. Maybe we need another pullback. We have leg 1, leg 2. Leg 1, leg 2, leg 3 fails at the bottom of a range. Maybe this isn't the leg. Maybe this is leg 1, leg 2. This is the leg. So you know, we can count however we want. We are only gonna know after it happens. Hope you guys are learning something. I am really starting to feel confident in my trading with these videos. I hope they're helping you guys. Keep studying. Study. Hit me up in the comments. Turn on your notifications. These videos drop every day at 3 p.m. The E-mini breakdown. Hit me up in the comments. If you're in the trader room, let me know. Just drop some comments on what type of trades you guys are taking. Have a good day, everybody. Bye.